I think it's clear that the global pandemic is far from over. While we have seen improving data in terms of global infection rates over the past couple of months, we are starting to see new waves emerge in a number of countries, largely driven by the more transmissible variants, such as the Delta variant. The vaccine rollout progress that we've seen in the first half of the year has been impressive, but it's also been lopsided. A number of countries across the world still have low vaccination rates. We think a resurgence in pandemic cases and the likely introduction of new restrictions or the extension of existing restrictions is one of the key risks to the global economic outlook. We also can't rule out another global supply shock, particularly as new, more transmissible variants of the COVID-19 virus could impact key exporting nations, many of which currently have low vaccination rates. We're also going to be keeping a close eye on the politics of OPEC and OPEC Plus and how tensions could impact global oil prices. There are a series of critical elections this year in Germany, Russia, South Africa, and France. And then in November, we have COP26 in Glasgow, which will be critical for seeing how global ambition in terms of tackling climate change meets the realities of actual commitments to changing policy, both at the national and international level.
The commitment of the Biden administration to combating climate change necessarily involves a lot of investment. Treasury Secretary Yellen has stressed that higher yields will likely be a consequence of this. We suspect that over time, this will become more important as a determinant of rates down the road. In particular, in terms of pushing up real interest rates over time, if it turns out that they are able to pass the kind of package that they are looking for. The inflation picture is cloudy. What we've seen is inflation exceeding expectations, and we've also seen the volatility of inflation exceeding expectations. The Fed expected a very gradual pickup in inflation driven by labor market tightness. What we've seen instead is a sharp increase in inflation driven by supply constraints and reopening demand. The Fed will have to weigh which of those forces are dominant in driving Fed policy. We think that the Fed will be somewhat tolerant of higher inflation, even though they will commence tapering at the beginning of 2022.